Tonight, I am delivering an exclusive investigation into a systemic collapse or a life-changing opportunity, depending on which side of the barricade you stand. We are on the precipice of an event I call the Liquidity Massacre. While the world sleeps, a trap has been set by the smart money, and tomorrow the jaws begin to close. This is not just a market report. This is a forensic analysis of the disappearance of trust and the violent return of physical reality. Tomorrow morning, December 26th, the world will wake up to leftover turkey and post-Christmas sales. But in the shadows of the global commodity markets, a black hole of liquidity is forming. While the big institutional traders at the desks in London, New York, and Singapore are skiing in Aspen or lounging in the tropics, the silver market, the very nervous system of modern technology, enters what we veterans call the ghost week. Look at this terrifying paradox. Silver just closed at $71.94 per ounce. That is a staggering 149% gain in a single year. Any sane observer would expect a correction, but instead of a retreat, we see an eerie silence. Trading volume has evaporated by 70%, yet 145,000 futures contracts are still hanging in the air like unexploded ordnances. The crowd thinks the market is resting. They are wrong. The market never sleeps. It only becomes empty. And in the world of high-stakes finance, a vacuum is never stable. It is filled with violence. A liquidity vortex is swirling, and the most critical factor, the one no one in the mainstream media is telling you, is that while the West is asleep at the wheel, a gargantuan force from the East has already pulled the pin on this grenade. If you follow the money, it leads to a chilling realization. Those 145,000 contracts on the Comex aren't just digital blips. They represent 725 million ounces of silver. To put that in perspective, that is nearly the entire annual mining production of the planet. Who holds these positions? And why did UBS, one of the most powerful banking entities on Earth, casually use the word unhinged to describe this price action? The answer lies in the massive premium gap between New York and Shanghai. While retail investors in the West are distracted by green and red candles on their phone apps, the Shanghai Gold Exchange is trading silver at a premium of over $5 per ounce higher than the global spot price. This is a massive industrial vacuum. China isn't just buying silver, they are running an industrial-scale suction machine, draining every available ounce of physical metal from Western vaults in London and New York. My investigation shows that silver inventories in Shanghai have plunged to 10-year lows. Why do they need this much metal right now? Because they know something you don't. On January 1st, Beijing is prepared to implement drastic export controls on silver. An ice wall is about to be built, cutting off the flow of silver from the world's largest factory. When the thin liquidity of Ghost Week hits the brick wall of a Chinese export ban, we don't get a standard price adjustment, we get a liquidity extinction event. Why now? Why this sudden urgency? Look at the technology. The global solar industry has shifted to Topcon cells. These aren't your grandfather's solar panels. Topcon requires 50% more silver paste per unit to achieve its efficiency. China controls 80% of this supply chain. They aren't just players, they own the casino. By hoarding physical silver and then cutting off exports, China is effectively taxing every Western tech company. If Tesla, Apple, or Samsung need silver for their 2026 production lines, they will have to beg for it, and they won't be paying $72. The US government has seen this coming. That is why silver was recently designated a strategic critical mineral. This is the opening act of a metal war. We have seen silver deficits for 7 consecutive years, a cumulative shortfall of 678 million ounces. We have been living on borrowed silver, draining the ETFs and the old stockpiles to fill the gap. But those stockpiles are gone. The paper silver market, which trades 100 ounces for every 1 ounce of physical metal that actually exists, is about to hit the wall of reality. In a market with 145,000 contracts and no physical metal to back them up, the price becomes irrelevant. The only thing that matters is delivery. And with China locking its gates on January 1st, the Western banks are caught in a pincer move between record industrial demand and a total supply blackout. Now, let's run the math for January 2nd. The holidays are over. Fund managers return to their desks in Manhattan, nursing hangovers and looking at their screens. They see the news. China has restricted exports. The Shanghai premium has exploded to $10. The 145,000 contracts on the Comex are suddenly a liability of $52 billion. Every short seller, every bank that sold silver they didn't have receives a notification, the margin call. Because there is no liquidity during the ghost week, the price doesn't climb, it teleports. The resistance at $75 will be vaporized. The smart money knows that $80 is the psychological breaking point. An $8 move from our current level is not a guess. It is a mathematical certainty when forced buying meets a physical drought. In a short squeeze, the price stops when the last seller is liquidated. But who is the seller if China has closed its doors, if the vaults in London are empty? The price runs until the industrial giants, the ones who must have the metal to survive, simply outbid everyone else. This is the feedback loop of the elite. It's not manipulation, it's the structure of a broken system finally collapsing. The ghost week begins tomorrow. By the time you watch this, the trap has likely already sprung. The 145,000 contracts are frozen. The Shanghai vacuum has done its work. The ice wall is being built as we speak. My advice? Do not be the liquidity for the big banks. Do not sell into the first spike. They want your physical metal. They need your shares in the miners to cover their billion-dollar blunders. When the world asks on January 2nd how silver gapped from $72 to $80 overnight, you will know the answer. It was a forensic certainty, hidden in plain sight, driven by a global struggle for the most important metal of the 21st century. This is the moment where paper meets metal. The $8 squeeze is just the beginning of a repricing that will define the next decade. Stay disciplined, stay skeptical, and above all, watch the vaults. Because in this market, if you can't touch it, you don't own it. I will see you on the other side of $80. You are witnessing the impossible, a paradox that defies the very laws of financial physics. Last night, Washington dropped a bombshell. U.S. GDP hit 4.3%, the strongest growth in 2 years. According to every mainstream economic textbook, this should have been the death blow for gold. The dollar should have soared to the heavens, and gold should have been crushed under the iron heel of rising interest rates. And for exactly 15 minutes, the script played out perfectly. Gold went into a free fall, shedding $60 in a guillotine move that wiped out thousands of retail buy orders. The crowd fled in a panic, convinced that the $4,500 bubble had finally burst. But look closer at the tape. Why, at that exact war zone of 4,500, did a massive, silent, and cold-blooded buying force swallow every single sell order? Why, when the GDP numbers looked their brightest, did gold stage a violent reversal, piercing through the 4,500 ceiling like an unstoppable arrow? The answer does not lie in Washington, it lies in Beijing. Last night, while the world was hypnotized by America's hollow GDP figures, the Eastern Dragon was executing a move of total subversion. Welcome to this special investigative report by News Finance. I am your guide through the shadows of the global money flow. Let me perform an autopsy on that 4.3% GDP figure for you, so you can see the rot inside. As a hedge fund manager, I don't look at headlines. I look at the internal organs of the report. The reality is grim. American consumer confidence is crumbling. Durable goods orders, the very backbone of industrial production, have plummeted by 2.2%. So why is the GDP so high? Because the US government is spending money like there is no tomorrow just to maintain a veneer of prosperity. This isn't growth, it is a forced blood transfusion from public debt. But while the retail crowd was being distracted by these synthetic numbers, smart money was tracking a different ghost, the People's Bank of China. Satellite data and customs reports reveal a chilling truth. China has been stealthily accumulating gold for 13 consecutive months. Even as gold hit all-time highs, they did not stop. Why? Because Beijing has looked through the smoke and mirrors of America's $36 trillion debt trap. Follow the money. Last night, when gold dipped into the 44.50 zone, massive iceberg orders were triggered. These were not the orders of retail traders. These were sovereign reserve orders. China is trading paper dollars for physical gold bullion. They are building a great wall of gold to shield their economy before the American financial storm makes landfall. And China isn't just buying gold, they are executing a scorched earth strategy. In the last 48 hours alone, they dumped over $11 billion in U.S. Treasury bonds. This is a mass exodus. When your largest creditor starts throwing your IOU notes into the trash, you know exactly what is coming next. Connect the dots, and you will see a terrifying picture of the collapse of the old world order. In the West, Donald Trump is creating an unprecedented political earthquake. He has openly challenged the Federal Reserve, the institution once considered the holy sanctuary of currency independence. His message is blunt: either pivot and cut rates to save the economy, or step down. When the Fed loses its independence, the US dollar is no longer a safe haven. It becomes a political pawn, and that is the spark for gold's fury. In the East, Beijing is weaponizing this instability. They are leading the BRICS nations to create a new settlement system. Their strategy is simple: the weaponization of gold. They know that U.S. public debt has passed the point of no return. The interest payments on U.S. debt now exceed the entire national defense budget. This is a spring compressed by desperation. China is standing on the other side of the battlefield, quietly gathering every ounce of gold possible for the moment that spring finally snaps. Imagine this: when the dollar is politicized, when U.S. debt explodes, and when China introduces a currency backed by gold, the $4,500 mark today will look like a quaint starting point. We are in a war without bullets, where the weapons are not nuclear missiles, but 24-karat gold bars. They, the manipulators, want you to believe the dollar is still strong, so they can exit their positions safely. But we, the smart investors, must see the current flowing beneath the surface. The $4,500 barrier has been conquered. But do not misunderstand me. This is not the time to celebrate or take early profits. Technically, we have entered a vacuum zone. There is no more historical resistance. Above us is an open sky. When the algorithms of the major banks fully recognize the structural collapse of the dollar, a mass buy-stop sequence will be triggered. This will be a short squeeze of biblical proportions, incinerating every short seller on the planet in an instant. The next target, 4,600, 5,000, it is no longer science fiction. With China aggressively increasing its position and Washington's policies accelerating the erosion of trust in the dollar, we are entering a new financial epoch, an era where gold is no longer jewelry, but the only life jacket on the Titanic of fiat money. Here is my final warning to you. Do not be the person standing on the tracks when the high-speed train arrives. Last night, thousands lost everything because they believed in that 4.3% GDP lie. They sold their gold at $44.50, and now they are forced to buy it back at $45.20 with bitter regret. Do not sell the insurance of your life for a few minor tremors. Follow the footprints of the Eastern Dragon and the smartest money in the world. The market is never wrong. Only those who misread it pay the price. The great game has only just begun. Which side will you choose? The side of paper notes losing their soul, or the side of the eternal metal? Don't forget to subscribe and turn on notifications, because in the coming days, this battlefield will only get more brutal. I will be here with you, stripping away the masks of Wall Street one by one. I'll see you in the next investigation. Stay sharp and hold your ground in this financial storm.